If he does retire, he's probably going to have to keep working. We make decisions, and then one day the decisions make us, especially in finance, especially when buying a property, setting up super. Making decisions is really important. I think having the right people around you to make those decisions are important. People always think in terms of financial dollars, but I think the biggest expense is actually your time. Hi, this is Nathaniel from Loan Lounge Podcast. Today we'll be discussing SMSF, the intricacies of self-managed super funds, some of the things to do, not to do, and some of the things to think about if you're going to jump on the SMSF journey. So welcome.
Episode 1.
I am Nathaniel from Loan Lounge.
Hello, I'm T from Loan Lounge.
And I'm Bobby from Loan Lounge, aka Bob the Broker.
Bob the Broker.
Yeah, we are mortgage professionals, and we're here to hopefully provide some insight and some education on how you can make better financial decisions for your future. So we thought we could cover a topic that a lot of people ask questions about. Sometimes we get inquiries about, and whether SMSF is right for you. What is an SMSF? Can you borrow inside an SMSF? How do you make those type of decisions? So I thought we could cover that topic today. So SMSF, tell you what did it stand for again?
Self-managed super fund.
Yes.
Super
cool.
fund.
SMSF, yes.
Oh, it's super fun here.
Completely.
Yeah, but usually I think when people think about SMSF, they don't think it's super fun because
Why
it's
is that?
the self-managed part makes it not super fun.
What makes it self-managed?
What is an SMSF?
So basically the name itself will probably give you the definition, like SMSF. It's self-managed rather than someone managing it for you.
Yep.
So usually when we start a job, we have to pick a default fund with our employer, or the employer chooses a default fund, right? And usually that fund is called an accumulation fund, which basically just accumulates over time. Out of your income, your PAYG income, you have to pay something called a SGC, which is a superannuation guarantee contribution. At the moment, I think it's 11%. Like I have to check. I usually do a Google to remember.
It is 11%.
11%, but it's gone up 0.5% from last year. And it used to be like 9%, but it's moving upwards. I think they're trying to move it to 12%. So the employer actually pays for that. You don't actually probably feel it because it doesn't hit your bank account, but it hits a superannuation fund that you can't really touch until you're about to retire. So the accumulation fund is like, there's many out there, right? There's Australian Super, Hester, etc. And someone just manages that super fund and you pay a fee for them to manage it. So there's not really much for you to do. It doesn't take that much time and effort, and someone basically manages it for you. So that's a big difference to something that's self-managed.
So what I'm getting at here is most people would have their superannuation in a default super fund, right? Whereby SMSF, you can. What you're telling me is you can buy property.
If you go back to what you just said, a default super fund. Default is if you decided not to choose or make a choice on which super fund you wanted to go with. Hence, it's a default fund. But as a employee, and if you have an accumulation fund, you still have a choice, right? You still have a choice to invest it into certain superannuation funds, have a certain type of investment exposure, whether it's shares, like indirect property, like overseas shares here, fixed income, cash, etc. So you still have that choice. There's rules around accessing super. So you can utilize the superannuation funds to purchase a property inside super, but it cannot be done within like an accumulation fund. You have to set up something called a self-managed super fund to be able to buy property or to be able to borrow funds to purchase property.
Is it a myth that it has to be like it's actually really expensive to purchase under SMSF? Because I've been told that you've got a significant amount in your super fund to purchase because it's expensive or something. So there are like setup costs in terms of setting up a superannuation fund. So a superannuation fund is like a trust structure. So if you were to set up a trust with an accountant, I don't know like what accountants charge, but let's just call it $2,000 for a setup of a trust. But you also need to set up a corporate trustee or a company, which could be another $2,000. So let's say, for argument's sake, the setup cost is $4,000 to $5,000 in one go, a one-off fee to set up your self-managed super fund. That's just the setup cost. And then when you move your funds or the money inside super from an accumulation fund and you roll it over into a superannuation fund, it actually just goes into a normal bank account, which is designed for superannuation. So you actually can go and just pull out the money or transfer it wherever you want, but you don't want to do that, right? Because
the tax office will really go after you and you have to pay quite a lot of tax, or you just get in trouble, right? You have to put that money back. So you're not meant to use that funds unless you meet certain conditions of release. And there are like, you can just Google conditions of release, like if you had like terminal illnesses or there were certain things that happened in your personal circumstances, you can access it. But superannuation is designed for your retirement. You're meant to put that money towards your retirement, and then when you retire, usually over like 55 years of age, I don't know the exact number, I'm not a financial advisor by the way, I'm just giving you information. That might not pertain to your situation, right? But you have to meet a certain condition of release to access that money. So there's the setup costs and then there's the ongoing costs. Because you're managing it yourself, I think people always think in terms of financial dollars, but I think the biggest expense is actually your time. Your time in managing like the paperwork and the regulation and just keeping up to date with everything. So you really need to have good partners that you're going to work with, especially a good accountant that you can ask questions about. And also I would say a good financial advisor just to get the right investment strategy in place. Because the only reason why you would really set up a self-managed super fund is so that you can access investments that you cannot access via an accumulation fund or your typical superannuation fund.
So would you say that you got to be quite savvy?
Yeah, I would say
to be on top of regulations, audit purposes.
Yeah, I think if you're not good at organizing or you don't have the time for the admin, then like why would you do it? I think it should all come back to your purpose and your strategy. So if your purpose and your strategy is to diversify your investments, for example, then maybe you want to put some more money towards property. Maybe that's your skill set. You know, you're just good at investing in property, so you don't really want to invest into the share market. So you decide to take that money, put it into a super fund, and then invest in property. But if you're I think a normal person, like I have a super fund, by the way. I have a self-managed super fund, and I have to think about it, right? If I have already some property investments in my personal name or even in a trust structure company, whatever, and I want to diversify into shares or into a managed fund, like why would I do it in my own personal name when my money's already in super? Why don't I just leave that money in super and invest it into the market, the stock market? And that gives me the diversity. That's why I think it's important before you set up any of that, like just to get the right advice, either through an accountant or sit down with a financial advisor, come up with a statement of advice, and then just find out what your strategy is and then make the decisions from there.
So let's talk about that, right? Let's say, okay, you've already spoken to a great accountant, great financial advisor, they helped set up an SMSF structure, and now they're ready for the asset to be a property. What is the beginning process of which a customer can get an a property through the SMSF?
That's good.
Yes, I think the first step is to always get a pre-approval or just to sit down with a broker and understand their financial position. So there's just like you would go and buy a house in your own personal name, you can do something similar in your SMSF as well. The SMSF is considered a separate entity. So there's you. So I think you should think about it in two ways. Like one is what's outside of superannuation, which is the normal stuff that we do, like buying in our own name and a company name, etc. But when it comes to SMSF, it's a totally separate structure under separate laws. There's the SIS Act, which governs the superannuation industry and also SMSFs as well. So there's a way that lending works inside an SMSF. For example, the income that goes inside an SMSF is your contributions, which is the 11% of your PAYG income, or if you're self-employed, it's the personal contributions that you make and the rent that you receive. So that really will determine your borrowing capacity. We don't take into account things like living expenses, other debts as well we don't consider. We might consider if it's inside the super fund, but not if it's outside. So it might allow you to purchase that extra property if you're already limited outside.
That's great. And for the purposes of income for the servicing, right? Normally, as an individual, it will be how much money I make a year. When it comes to SMSF, how is income calculated?
So let's say you're earning $100,000 a year. It will be based on what the superannuation guarantee contribution is for that year.
Right.
So if that year the government, set it at 11%, so it's $11,000. And then the good thing about super is you get taxed at 15%.
Okay.
So we can use 85% of that income. If you had that money outside, like you get taxed at your normal income tax rate if you're receiving that. And so you can add, do extra contributions into your super as well, right? You can salary sacrifice, you can put extra in there. So we'll calculate all that, and then we'll take into account the rent as well from either the commercial property or the residential property.
Yeah.
And that can be used as income to service the loan.
Yeah. Can you use SMSF to buy your owner-occupied property?
No, you cannot.
Okay.
Yeah. So with SMSF, it has to be a non-related party, like it has to be arm's length.
Yeah.
You can't rent it to yourself. The only time you can rent it to yourself is if you run a business and you buy a office premises or an owner-occupied premises that you lease to yourself at market rates.
Yeah.
So you probably see doctors doing this. A lot of doctors will buy their medical practice and then lease it to themselves via the super fund.
Right.
I think it's great because you keep everything in-house, right? Yeah. You're contributing to your super fund, you're growing that asset, you're paying a lease into there, no one can kick you out as well because you're controlling everything. Yeah. So I think that's a really good tip for business owners.
Yeah. Doctors, if you're out there, come talk to us. We can help set it up for you.
Doctors, dentists, any business that operates from an office, even for example, as a brokerage, if we have an office and if I bought that under SMSF, I can lease that to myself as well.
Yeah.
So it does make sense. It's really attractive. Why is it that only a handful of lenders out there allow lending for SMSF?
It's probably a good question because it's a bloody lot of work.
and all the big four banks have stopped it.
Yeah.
They don't offer it now.
I think it's a lot of work. There's a lot of compliance. The loan sizes are typically a little bit smaller. I think like it's
not part of your core strategy.
It's quite a bit of like if you're a first home buyer, you've never bought property before, and you decide to buy a property inside super, or let's say even a commercial property inside super. Like it's I'm gonna say it's a bit of a headache because it's just a lot of paperwork. And if you haven't been through the home loan process already, this just adds another layer of complexity. I think that's why a lot of banks maybe pull out because it's probably not as profitable. There's a lot more compliance. There's a bit more work.
Why is it not profitable though? Because the client will tend to stay and not hop around or refinance out.
I guess it could be like the skill set as well because like for example, most brokers, they don't want to do it. When they see SMSF, they're like, nah, we don't do it.
We don't do it. Brokers, but bankers as well. Right? Like the actual bankers for the big four, they won't want to do it because it's too high.
But it's actually quite simple when you work out the numbers and you understand how superannuation works.
I love that you love it.
It's just the number of paperwork that's involved can be quite consuming. But when you look at it, it's quite simple.
So let's break it down with a simple example. Recently you did a really good SMSF deal. You were able to help like a business get another warehouse, expanding their facilities. Can you talk through that deal and how did you come across the client and how were you able to help them with SMSF property?
Yeah, so that particular client runs an engineering firm, and the father owns the business, and the son was just working for the business. And so what the father did was he added the son onto the SMSF property. So when you add another person or another member onto the SMSF, we can use their contributions as income. Because they're self-employed, if you're self-employed, right, you can just contribute to super whenever. You can just be like, all right, I want to put in $27,500, which is the concessional contribution cap, where you get taxed at 15%. So they could just do that whenever. So with a self-employed applicant, we actually look at the average of the 2 years. So they've been doing that for 2 years for both applicants. So 27.5 times 2 is $55,000. So they're doing that into the super fund. So that I can use as income. Plus the new property, they're going to lease it out. So we just do a valuation on the property and whatever the valuer advises as the market lease, we can use that as income. So we're able to get the client an $880,000 loan. It was 80% of 1.1 mil. So we could go up to 80% really with a commercial loan.
Great.
The rate's a little bit higher, but it's inside super, and we could also give the client an offset account. So you find that with super funds, oftentimes they have large balances, right? Because they're putting in super like on a weekly, monthly basis. So as that grows, at least the offset account will help them. So if you're an existing SMSF like borrower, either like you're usually with some of the major banks or smaller lenders, oftentimes you won't have an offset account. So that's a little feature that we can provide for clients as well.
So that's great. And so just to summarize, it's not about how much money you make as a business, but it is about how much you're contributing to your super, plus the amount of lease income you get from the property that's going to determine how much you borrow, correct?
Yeah, that's right.
Yeah.
There are sometimes moments where, like, if it's short a little bit, you can propose to make additional repayments or additional contributions into your super. But you really need to prove that you have that disposable income, right? So we might run like a calculation outside of super to make sure that there's like you're quite positive in terms of servicing a debt outside. And then those contributions can be added into super as additional contributions. But that would need to be supported sometimes by maybe like an accountant letter or statement of advice.
Great.
By a planner.
In terms of turnaround time, is the SMSF loan the same as a normal loan that you apply for?
Yeah, it all depends.
It depends.
It all depends on how efficient we are with paperwork. If we have everything and we apply in one go. I think turnaround times are there for... You know, they just give you like a standard turnaround times, but if it's urgent, if you have a contract of sale, if you've moved on the property, then it gives me more reason to escalate the file and get you an answer sooner. But if a client comes to me and they haven't even found property and they're like, I want to answer in 1 or 2 days, I'm like, yeah, great, good on you. So, I don't mean, like smart, but like sometimes it takes a bit of work.
This is for all clients.
Like I would say standard maybe like 3 to 5 business days. But if there's some urgency there and you have to move on it, then we can like negotiate, we can talk to the lender and speed things up. But oftentimes if it's a pre-approval, it might take a little bit longer. Oftentimes you might not even want to set up a super fund, right? You just want to know how much you can borrow. So I can just run the numbers, like a calculation, and give you an indicative like idea of what you can do. And then you can make the decision. So
so
we
what
can
you're
do
saying
those
is
things.
like clients don't necessarily need to have an SMSF set up yet in order for you to spit these
we can
things
still
out.
work out like how much they can borrow.
Okay, cool.
Make those calculations on an indicative basis, right? There'll just not be nothing in writing. We'll just verbally provide it to you.
And also by doing it via SMSF, by getting another property, another loan, it doesn't impact personal borrowing capacity. Is that correct?
That's correct.
So then the client can still go ahead and get other property, and the SMSF and everything is sitting separately and independently.
Yes, in most cases, yes.
Great. Sounds like a great idea.
Make sure you have a minimum balance. I would say like at least 250. If you have like 50,000, 100,000, like I wouldn't even bother unless you can find this like amazing property that's going to give you an amazing yield, right? So you have to really think about this because superannuation, like the money sits there, it gets taxed at 15%. Later when you're in like a pension phase, I think you can sell it and you pay 0% tax. These are some of the benefits, but you can look into it for your own personal circumstances. But make sure that you have a minimum balance of at least 250 because it is quite expensive to run. You need to get an accountant to do the tax returns, and then you need to get someone to audit the returns on an annual basis. And then you're managing everything yourself, right? So you got to collect the paperwork, you got to send it in. With an accumulation fund, it all gets done for you already. And you can just choose like maybe an index fund where the management fees are really low. So you have to really think about whether it's a good decision to go into SMSF. I wouldn't recommend it for everyone. Sometimes even people that have gone into the SMSF and you realize it's a lot of work, like just close it, wind it down, go back to an accumulation fund. Just make a decision, I think, to simplify your life, diversify, and just try to keep it simple, really. I have a client that I was working with. He's actually a minister for a church, and he's in his 60s. He's about to retire in about a year or two, but he still had quite a bit of debt on his owner-occupier property, and he was considering retiring in 1 or 2 years. But I knew like what his living expenses were, and I didn't think he can retire on the same comfortable like living style that he's on now. If he does retire, he's probably going to have to keep working. But he also had a property inside his SMSF, and that property was actually running at a loss. So it's pulling money from the super fund every year, and it hasn't really gone up in value. And it was a small property; it wasn't worth that much, probably around 300 and something thousand. But there was a loan against it, and so like when I see that, it kind of frustrates me, right? Because like if you ever get approached by a company that recommends a property to you, and then they recommend that they'll set up the SMSF for you as well, they'll do the loan for you, and then they'll do the accounting. If you think about the income stream from this this one transaction of one client, right? They might make a few $1,000s from setting up the super fund for you. They might make Like the lease is probably from the mortgage broker. They make the lease. Like we make the lease from setting up the loan. And then there's the property that they recommend. They probably get paid for that as well. So you have to think about that. If you were to go to one person, they give you the advice.
It's in like it raises red flags.
Yeah, it raises red flags because there's a big conflict of interest there.
Yeah.
How do you know they're giving you the best solution?
Yeah.
I would say that you would try to get multiple sources of advice, not get it from just the one person.
Yeah, great.
Like use a buyer's agent, maybe use an accountant, a broker, or a solicitor, and then maybe get advice from each and every one of them, but not all from one single source. Because oftentimes I find that you hear a lot of negative stories from that one, if it's coming from that one source, because they have so much incentive, right, to refer or to sell you this product that includes everything else. Even though it's one-stop shop, it's convenient, but you pay it once, you might feel good for a few years, but in 10 or 15 years, that decision really will weigh you down. So if this person, for example, if I think back 15, 20 years, they just left their money in an accumulation fund. They added 10% on it every year. Whether the market is going up or down, over time, they're probably going to make 6 or 7% return, right? In the stock market. So they would have been in a much better financial position, less stress, less headaches, and now would have had something that they could live on or they could enjoy their retirement in. So I think, John Maxwell, he always says, we make decisions and then one day the decisions make us. And I think that's so true, especially in finance, especially when buying a property, setting up super. Making decisions is really important. I think having the right people around you to make those decisions are important. And for someone starting out, it just takes a bit of time, like any relationship, to build that relationship, like find an accountant that you're comfortable with, you can call, you can talk to, you can ask questions you're not afraid to ask, a broker as well, a solicitor, a financial advisor. And then as you build this team, over time, as you get older, your assets start to grow, you can be a bit wiser around making better financial decisions.
So in this instance, what happened to that property?
He's still holding on to it. I think he just really needs to face reality and decide like what he wants to do. Either like sell down, maybe live on a lower like standard of living. If he wants to retire soon, or just continue to keep working.
That's a sobering, humbling story.
Usually there's a lot of like things on the internet or people that will try to sell you the idea of buying inside super. But oftentimes you're buying inside super is because you can't afford it in your own personal name. It's a good idea because like most people, that it's hard for them to save, right, or have a big lump sum of savings. But in super, because it's forced on you and your employer forces you, like you have that there. It doesn't mean though that you should go and buy property. It doesn't mean that. Like it should fit around your overall strategy going forward. If you're not sure what your strategy is, then I think just spend some time thinking about what you want, what the end goal looks like, or sitting down with a professional and doing that. So that's probably the main red flag. If they're selling the property, they're getting you to set up a SMSF, and then they're providing the lending, the conveyancing, and the accounting, like all in that one shop.
But that's not to say that it does. It just raises the questions, and you just got to be satisfied with what their response is, right?
I'm not saying they're all bad providers. There's probably some good providers out there as well. But just like be careful.
Do your due diligence. So any last tips or tricks for people thinking about using SMSF to get a property?
Start building your A team and then go from there, right?
Because you can use that team for whether it's SMSF or not, right?
Well, this has been such a good session, guys. Thank you so much. And if you like what you've heard, why don't you give us a thumbs up, follow us, our Loan Lounge podcast, and reach out to us, and we're here to help you with anything that you need. Thank you.
Super fun.